I hereby call to order this committee of the whole meeting for Monday, February 12th, 2024. The time is 8:00 a.m. and it is Abraham Lincoln's 215th birthday. Will the clerk please call the roll?
Aaron Stone.
Here.
John Cesaretti.
Here.
Ann Hart.
Here.
Bonnie Kim.
Here.
Allison Pathless.
Here.
Amy Paling.
Here.
Lisa Schneider-Fabes.
Here.
I seek a motion to approve the minutes of the January 16th, 2024 Committee of the Whole meeting.
I move to approve the minutes of the January 16th, 2024 Committee of the Whole meeting.
May I have a second?
Second.
The motion has been made and seconded. Board members, are there any comments, errors, or omissions to the minutes? Seeing none, all members in favor of approving the minutes say yay. Yay. Motion carries. As there are no facility development or strategy items, we will begin with school finance. Mr. Cesaretti.
Thank you, President Kim. So I think I'm going to turn this over to Corey, and we're going to talk about the audit report first.
All right, so very recently we wrapped up our fiscal year 23 audit with Baker Tilly. So for the first two agenda items this morning, Nick Cavallari, partner at Baker Tilly, is going to walk us through the audit for both WICSE and D39. Take it away, Nick.
Okay, perfect. Well, good morning, everyone, and thank you for having me here this morning. I'm going to share my screen. I've put together a very brief PowerPoint presentation, but the board members should have received copies of the district's annual comprehensive financial report and several other documents that come along with the issuance of the conclusion of the financial statement and single audit. So let me see if I can get this to work. All right, perfect. Is everybody able to see my presentation on their screens? Okay, perfectly. So we concluded our audit and we issued our financial statement opinions on the district's financial statements, their single audit, and that was dated January 31st, 2024. The scope of the district's financial statement audit is fairly robust. We render assurances on the annual comprehensive financial report, the Illinois State Board of Education annual financial report, a consolidated year-end financial report called the CIFER. It's a document that's required to be submitted to the Grant Accountability and Transparency Unit. We render assurances on the schedule of expenditures of federal awards, commonly referred to as a CFA. It's a document that's required if you expend over $750,000 of federal award. We issue a report on internal control over financial reporting and other matters that are conducted in accordance with a audit that's performed with governmental auditing standards. And then we also do complete a single audit for the district's major federal programs. So after we complete all of our audit procedures, at the end, our responsibility is to render an opinion on those documents. And we were able to render unmodified audit opinions or clean opinions on the district's financial statements, the Illinois State Board of Education's annual financial report, the consolidated year-end financial report, and the schedule of expenditures of federal awards. An unmodified audit opinion is the highest level of assurance that you can receive from the external auditor that your financial statements are presented in accordance with generally accepted accounting principles and don't contain any material misstatements based on our audit procedures. The annual comprehensive financial report is a very robust document. It contains a lot of historical information, current year information, comparisons to prior year and budget. If you wanted to get a really good, I guess, 5-minute read, I would definitely recommend taking a look at the management's discussion and analysis. It provides a nice synopsis of the results for the fiscal year. But I always do like to bring to everyone's attention page 18 and page 19 of the annual comprehensive financial report, because this is really your income statement. You'll have your funds presented in columns, revenues at the top, expenditures in the middle, and then you have a line here that's titled excess, or in parentheses, deficiency of revenues over expenditures, which is really essentially your transactional differences between revenues and expenditures before you give consideration to things like bond issuances or transfers between funds. And you can see that the district's main fund, the general fund, which really is the educational accounts, was able to work within its financial resources during the year. The operations and maintenance fund had a surplus, which was then subsequently utilized to transfer dollars to other funds. The bond activity is recorded in the general fund, which also includes the working cash accounts. I'll have a note on the next slide about some of the transfers that the board approved, which essentially moves money around between funds, primarily to get dollars into the debt service fund and into the capital projects fund to finance the district's facility work that was ongoing during fiscal year 23, and then of course the bond activity that took place during fiscal year 23 as well. But looking at your financial results, there was nothing that was concerning by any stretch of the imagination. Reasonably good fund balance reserves. The district also received a 4.0 out of a 4.0 scale for the financial profile score. That is something that every school district in the state of Illinois receives on their annual financial reports form. During the year, there were several transfers that took place, moving dollars from the working cash funds to the capital project fund. This $11.2 million was the result of a bond transaction that took place. The bonds were issued, placed in the working cash fund, and then ultimately transferred to the capital projects fund. About $995,000 were moved from the O&M fund to the debt service fund to cover outstanding debt certificates. $136,000 was moved from the educational accounts to the debt service fund for the prepayment on leases that were outstanding. And then about $4.3 million was moved from the O&M fund to the capital projects fund for capital project purposes. That will conclude the financial statement discussion, and then I'll just move into the single audit results, and then I'll open the floor to any questions that the board may have. But we conducted a single audit for the district. You had expended approximately $1.9 million of federal awards. There was one major program that required to be audited, which is the special education cluster, or the IDEA program, which was about $1.2 million of expenditures. By auditing this major program, we had essentially received about 65% coverage, which was adequate for our purposes for testing your major programs. And the type of reports that we rendered on the IDEA cluster was an unmodified audit opinion over compliance with those award dollars. And we also did not identify any material weaknesses when we tested controls to ensure compliance over the areas that the federal government asks us to look into. So essentially a clean single audit for the IDEA cluster. During the course of the audit, our responsibility is to gain an understanding of your internal controls over financial reporting purposes. During that process, we will tailor our audit procedures to address risk that there's a potential error or material misstatement in your financial statements. So we look at your accounts payable cycle, payroll cycle, your treasury function, year-end close, and then of course all the other information that's compiled throughout the audit from all the various tests that we perform. And at the end of that, if we identify any material errors in your financial statements that we detected and corrected as a result of our audit procedure, or if there's some or controls that are designed as effectively, in our opinion, that we believe you can remediate and improve on, we would render a material weakness or a significant deficiency, bring that to the board's discussion, bring it to management's discussion for further consideration. Pleased to let everyone know that we did not have any material weaknesses identified and reported in the course of the audit, nor did we have any significant deficiencies identified and reported. We also did not identify any instances of non-compliance that are required to be reported under governmental auditing standards. So overall, the conclusion of the financial statement audit and single audit is an unmodified audit opinion on all documents and no significant internal control matters reported. I'd be happy to take any questions from the board at this time.
Have my reading glasses on? No one? Oh, I guess maybe it's me then. Hey.
John, I'm having trouble hearing you.
Oh, can you hear me now?
Yeah, that's better.
Okay, sorry. I got to do this.
Thank you.
Nick, we really appreciate your work. We appreciate what your team does for us. This is an excellent report. Thank you. I had a few questions. So I think, the report is good. I think think we think our financials are in good shape and that we run it very conservatively. We have a lot of faith in our management. I think the thing I worry about are the things we don't have control over and would love to hear your opinion about. So every year we sort of think about the pension cost shift, like if that's ever going to happen. Hopefully it doesn't, and would love to hear any opinions you might have on that and understand that those are your opinions.
Sure. Yeah, I think for many years, there's been a lot of discussion around the possibility that there could be an increased shift of the pension costs to local school districts. Right now, for the most part, the system is supported by employee contributions of 9% on credible earnings, and school boards are required to contribute 0.58% on those credible earnings. So about 0.5% on all the credible earnings. And then the state of Illinois is also required to make contributions to the system based on actuarial determined amounts. As of this date, I haven't really seen that have a lot more traction. There's been a lot of discussion around that. I would say that, from what I can see, looking at school finance in general, and some of the things that have happened at the legislative level, the state continues to support the evidence-based funding model, contributing the additional funding that was essentially established when it was put in the statutes. Your school district is not a significant recipient of evidence-based funding or new evidence-based funding dollars. So although that legislative increase that's been taking place is wonderful for the entire state, and many other school districts benefit significantly for it by getting closer to adequacy, your district does not have a significant increase from that legislation. So to me, seeing those types of things take place gives me a lot of confidence that the state is doing well. We have seen some decreases in funding allocations. The corporate personal property replacement tax was a funding source that we've seen a lot of an uptick throughout the pandemic. I believe that's starting to slow down. There's been forecasts, I believe, stating that could go down anywhere between 25 and 30%. Again, your district is not superly reliant on that funding source. Inflation continues to somewhat stabilize and level off, but isn't really fully stabilized and level off from everything that we still continue to see. So, I think the economic environment continues to be challenging, and I don't believe that there's going to be a big pension shift in the next year or two, maybe even forever. We'll see. But I do believe that it's always something to keep in the back of your mind and just have an awareness of it, and then understand what that impact could be. If your particular contribution amount increased to just say a doubling of that particular value that you're currently contributing, there's a schedule in the act for that shows the historical funding levels and the corresponding state contributions. I'm trying to get to that page just to kind of give you an idea of what that value is.
Oh yeah, that's helpful. Thank you.
And it's not significant comparatively to other costs that the district has that are ongoingly increasing. Things like transportation have been a sizable increase for several years.
Nick, would you say it's
That's continuing
50
to
and
happen.
51?
I got it. It's coming. I am on page 50, and your district's contributions to the teachers' retirement system in fiscal year 23, which includes contributions on federal award dollars and the normal contributions, was $225,000. So perspective, your ed fund and your working cash fund operated within about $1.4 million of operations. So if we did like a pro forma and said, well, if it was double from last year and that happened now, you still would have been able to, I guess, weather that storm.
Yeah, it's super helpful. I think the number I always focus on is I think that total net pension liability, our portion of the state's, overall plus the local which from
Yeah,
what I-
no, you're 100% right. The pension liability is a long-range liability, and that's sizable comparatively. But the actual operational cost to the district, money out the door necessarily is the contributions that you make on the pension system itself.
yeah. Yeah, so is the number 255 million?
It's on page 50, and the state's proportionate share of the net pension liability right now is 252.5 million, and the allocated amount to the district is 2.9. So overall, it's 255, but there's an allocation methodology between how much is the
Yeah.
district's and then the state's for reporting purposes.
All right. All right. All right. Thank you so much. Does anybody have any follow-up questions? I think I got to say, I'm not sure, Corey, if it was you or Nick who put in these statistical sections, but I love the statistical sections. The thing I always worry about is our property taxes are limited by CPI, yet I think a lot of people think that wage growth is also important, and I think we put that into our report. And I don't know if that was you guys or us, but I think that's very valuable. And
We
it
gather
looks-
up a lot of information for that, with the help of some outside services.
Yeah, what page? I was looking at page 103.
Yeah, because the district presents an annual comprehensive financial report, there's additional, statistical information for the current year and 9 years prior, in some instances, or even up to 10 years worth of data. And it does give you a lot of great perspective as to where you've been, where you are currently. Yeah, the CPI has been heavy. It's been heavy.
Yeah. Yeah, but it looks like wages have kept up, so that's good. Well, I had one more thing. So I understand that I want to congratulate you guys. I think Baker Tilly went through a transaction with private equity, or is going to, and was going to give you an opportunity to speak to that. And just want to make sure that the quality of the services we're receiving are not going to change.
Sure, no. Thank you for pointing that out. Yeah, so Baker Tilly is in the process of partnering with a private equity firm to become, essentially an investor in our firm. I would say that the day-to-day activities will not change as a result of that. The people who continue to serve on your account and provide services to you will remain completely unchanged. I think from a client perspective, necessarily, you won't even notice anything. What will allow for us to do, we'll be able to, continue to improve on the quality that we provide our services, investments in technology and other service offerings that we provide to our clients. But I can't imagine that it would have any notable impact to your individual account for the foreseeable future. I'm not going anywhere. I'm not retiring or running out the door, and neither is Anna Wizawati, who's been on the account, James Klimt, who's also servicing your audit. So I think it's an exciting time for us as a firm to be part of this transaction. There will be potentially new things that we can learn how to do and improve better. But I would say that, the day-to-day operations of the financial statement audit will remain unchanged.
All right. Well, appreciate that. Thanks, Nick. That's all I had.
Nick, do you have anything on Wixie or?
Sure, yeah, I could provide a very quick, Wixie is a required audit, and it's really, for the most part, the most uneventful transaction that you can have. So the state board requires that all of these joint agreements have an annual financial report submitted that is audited. So we perform that audit, and we rendered an unmodified audit opinion on Wixie, and that AFR has been filed with the state board. Really, for the most part, it's a transaction that's due to the way the organization is structured, but it's not a significant series of transactions, and everything was in good order.
Great. Any follow-up on that?
Nick, can you unshare? I just got one page I would run through with them. Real quick. Thanks. All right. Okay, so every year as we wrap up and get to this issuance date for our audit, one of the things we do is we'll look back and say, well, how did we do from where we were budgeted for that fiscal year to what the actual information came. Sorry. So we started with for fiscal year 23 with the budgeted deficit. And so I'll just kind of hit on a couple of the variances that we had. Positive numbers are that they were positive variances. Any negative number was a negative. So you see just from top down to bottom, we had a very nice positive variance for this fiscal year. And I'll just jump to two of the biggest numbers first. So if you look at the top two rows, the salaries and benefits, that combines to be about 1.1 million. And one of the things that I had looked into as we had wrapped up fiscal year 23 is like, okay, particularly as we got into that year and started to see where the numbers were heading, it's like, okay, how did we end up with, particularly in that area, a higher number than I would like to see. So of that 1.1 million, I had gone back and looked at our job postings throughout the year and tried to average it by month. So I didn't like calculate this on a daily basis, but more like on an average by month. And so of that 1.1 million you see in that top two rows, about 900 of that for fiscal year 23 was related to unfilled positions. And so if you think about like where we were heading into that school year, we had not settled either of the recent contracts that we've settled. We had lots of openings with custodial in Paris. And so that contract with SSU where the board approved that first year adjustment, that didn't occur until a couple of months into the year. And so, we knew that making that adjustment would be beneficial and help with our hiring. I think the one thing that I saw, like looking at the numbers month by month, was we started in a really challenging spot. And while we did make some strides during that school year, we never really got to where we want during that school year because we started at such a deficit. The one thing I will say is because the contract is in place, and I look at where we're at through 23-24 fiscal year, we're in such a better, like we started the hiring process over the summer in such a better spot that we have very few unfilled positions. I haven't done this similar calculation because quite frankly, when I look at salaries and benefits for this current year, I'm not expecting this large variance because we're not going to have all these. We have a few here and there, but it's not like it was. So I guess like in looking back, it is some evidence that like what we set out to do in that SSU contract did work, which is good to see. So another big variance on this page is if you go towards the middle, there's the interest revenue line item. So the operating funds were over budget by about $1 million. So you think back to like, well, how did we get to such a large number for interest revenue? At the time we set the budget, which would have been in like the summer of 22, I think rates were roughly 2%, maybe slightly over. And there was definitely some expectation that we were going to see increases. But at the time we set the budget, they had not yet made the kind of historical per Fed meeting adjustments of 0.75%. They had been making like 1.5% changes. And then for the last half of calendar year 22 and certainly into the early parts of 23, we just saw, 0.75% increases one after another. And so that was not accounted for. So it was a very nice thing to have, but we, are hitting historical highs when we look back over about a 20-year period on interest revenue. So, it's nice to see. It's not something that's always going to happen because I do view that as a bit of a historical event. And even though we were 1 million over, if Cook County had been able in that fall, to be on time with their distributions of the second installment you could probably have added another 100 to 200,000 on top of that number that we kind of lost out because Cook County was delayed, say, 5 months. Property taxes, that,
Greg, can I slow you
Yeah.
down on that? So what interest rate are we using in our
So
future
for the-
budgeting?
so for that year, I think I had barely used, for that fiscal year, barely over 2. For this current fiscal year, that's ongoing, I used, I believe it was like 4.85 or 4.9, knowing that in the early part of the year, which is true, we have been in the low 5s, but there had been some prediction that we might start to see some pullback in the last half, and I wanted to have a little bit of wiggle room for that line item. So we're like trending pretty favorably, but for interest revenue in the current fiscal year, flip side to that is we did budget kind of a near historical high number based upon where we were at. The property tax number of 300,000, that's pretty much in line. That's roughly a little over a 0.25% variance. The replacement taxes, fiscal year 22 was kind of the first year we had a historical high for replacement taxes of about 1.5. The state had expected it to pull back a little bit in fiscal year 23. It did not. For us, fiscal years 22 and 23 were roughly at 1.5 million. So that accounted for that variance. And I think Nick mentioned, replacement taxes. In the current year, the distributions we received so far, nearly all of them have been about 40% less than their similar distribution in the 1 year prior. We had budgeted for a pretty sizable decrease, so I expect that to fall in line. And then as we just kind of scroll down, another one I think is worth highlighting, the sped tuition line item. Going into the year, we had increased that budget quite a bit. We knew there was a couple of students that were going to be outplaced at a very costly place. One of those students, I believe, was there all year, and the other one lasted just a very short time. So that's part of it. The supplies and materials for that fund is not really any one thing. When I looked at that, the 430,000 is several items that are all in that 50 to 100,000 range, kind of aggregated. Yeah, and that's really it. There's a bunch of other, smaller amounts that all add up when you throw it into the aggregate. So that takes us down to, a fund balance for the operating funds of 34 million and a 50.9% for fiscal year 23. Just a couple other thoughts I wanted to throw out there. At the end of every audit, there's really just a few things that I'm personally looking at to judge how we did or how things went. The first one is what recognition level did we get from ISB? So according to my notes, fiscal year 23 would be the 21st straight year. D39's got financial recognition, which is the highest category. Then fund balance, 50.9%, so we're within our parameters of 40 or higher. And then for me, one of the ones I think is really important is being able to have that outside audit firm say there is no material weakness or significant deficiencies. And when I look at that, there's really 2 areas that I think of it. One, the controls aspect, do we have internal controls set up, and did we actually follow them? And then the other part is as we're preparing the financials and sharing that info with Baker Tilly, did we make any mistakes, right? Did we make any mistakes, and particularly mistakes that would be large enough that would result in a material weakness or significant deficiency? And so to see that did not occur is always good. And then the last thing is just, having a positive variance is always a plus for the district as you start to wrap up 1 year and you need plan for future years. So in my mind, a lot of positives once again. A lot of people to have all those things that Nick talked about, actually happen. Lots of people, I guess the way I look at it, a lot of people doing their job. We've set the structures in place on the grant side, whether that's Kristen or Katie's department, following right? Nick's team is going to test those grants every year. It's going to be different, but just to be able to have that validation, and then several people in the business office also working on this and then just following through with what they're supposed to do on an annual basis. And then I guess the last thing I would say is just, we're thankful to Nick and his team to be able to add us to the end of the line. I know when Nick and I talked a couple of weeks ago, I think maybe 10 days to 2 weeks ago, Nick had shared with me that at that point, we knew we were getting close to wrapping up our audit. And there was still, I think Nick said 150 of like 850 school districts that hadn't wrapped up, which goes back to the whole, when we went out to bid, like there's a lot of challenges in the labor market for public accounting. So from that aspect, we're thankful that, Nick and his team were able to get this done for us. I'll be happy to answer any questions.
Lisa?
I want to say congratulations on the project.
Yeah.
It is,
We're gonna.
I concur.
Yeah.
I just had a quick question, Corey. So when you talked about the salaries that were under budget because of the, is that incorporated into that number? Is the amount that was paid for substitute teachers or like short-term workers are incorporated into that? Or is that a?
Yeah.
Okay.
Yeah, so just specific, I also looked up the subs. So I have a couple different accounts where we charge sub cost to for a few different reasons. And for fiscal year 23, that group relative to what we budgeted was about 25,000 under. So, I mean, I think the total sub costs were pushing 900, in the neighborhood of like 900,000. So it was, relatively speaking, it was pretty close. So certainly as we have unfilled, there is definitely, costs absorbed elsewhere in the budget. I don't know that it always ends up being a one-to-one relationship, right? Like if you have somebody out, then you basically you do incur other costs. I just don't, I don't think in every case it ends up in a one-to-one cost shift.
Okay, so I will congratulate you. I mean, we take it for granted, but it is a $93 million operation, and it's done, and this excellent work is done with very few people doing a lot of great work. So we appreciate it, Corey. We appreciate all you do. And Nick, we really appreciate the quality that you and your team bring to our audit, and wanted to thank you as well for this presentation. So I think that's it. Thank you so much.
That's all I have for WICSE and D39 audit.
Thank you for having me here this morning, everyone. Enjoy your day. Thank you.
Thanks, you
Thanks,
too.
Nick. All right. So we got one other item in the finance. Let me share my screen once again. Should go pretty quickly. Okay. So kind of one of the last steps in preparation for this upcoming summer construction work is to be able to do the work at McKenzie that we want to accomplish. We need to go out to bid to get a contractor on board for the abatement, asbestos abatement work. And just for reference, the reason for the abatement is the second floor at McKenzie, well, the last third of it anyway, really has right now it has two layers of flooring. So the very bottom layer is a hard tile surface that has the asbestos below it. And then at some point in our past, probably a couple decades ago, when the decision was to add new flooring, they could have abated at that time or add flooring on top of it. Not a completely uncommon practice at the time. And so what had occurred was carpet was put on top of the old flooring. Now we're ready to replace the carpet because it needs it. And the only way to do that is to take it all the way down to the very bottom and remove that. And with the asbestos in there, we need to do a proper asbestos abatement. So we in conjunction with our environmental consultant, did a bid, opened it on January 30th. And, you know, to get 9 responses was outstanding. From our perspective going in, you always have like kind of a ballpark. We were thinking something in the 80 to 100,000 range would be a fair expectation. So to come in a little bit below that was great to see. But then also, you know, anytime you come in under budget on some of these projects, you also want a little bit of validation that, you know, the respondents bidding read the plans and read the project correctly. And so when you see the top 7 clustered the way they are on this, it adds that extra level of confidence that, you know, everybody understood it and, you know, someone's not going to pull out. So the next step for this would be at our board meeting later this month, we'll bring back for board approval of this. And then once school gets out, the first step will be for the abatement team to get in there and get their part done, and then we'll get putting it back together. So happy to answer any questions.
I think, well, thank you. And the question I have is, okay, so we have this issue all over the place, just based on the age of our buildings?
No, there's probably, I would imagine there's asbestos somewhere in every building.
Yeah.
A lot of it over the last 2 to 3 decades has been removed.
Yeah.
So for example, right, we're doing flooring at Mackenzie on the last third of the upstairs plus the teacher's lounge. That requires the abatement because that has it in there. Same thing this summer, we're doing all the hallway flooring at the junior high. That had previously been taken care of, so we don't have to go through that process. So it exists in a few spots. I think the last larger spot of flooring was at Mackenzie, and with the second floor being addressed, I don't think there's too much flooring left within the district. I would imagine that the vast majority of it left would be any insulation on piping that's, you know, hidden away in the ceilings or walls. As have been explained to me many times, the asbestos insulation probably does its job as well as any product out there. But anytime you got a renovation project, it's a massive headache. So,
Yeah.
So we have some, and it will be a challenge here and there, but thankfully over, you know, a few decades, we've eliminated a lot of it.
That's great. Appreciate the background. I just see this much contractor interest, and I think maybe we should do more. So, I mean, yes.
But there was a big spread, right? And you know, I think
Lisa, do you mind pulling your microphone a little closer? Thank you so much.
on the big spread there, I think it was like over $10,000 less on the lowest bidder. Are you feeling it didn't raise any red flags?
No, we talked with the environmental consultant that puts this project together and then evaluates the bids. When we talked about like the lower end of like when you go in, so there was a mandatory pre-bid for construction projects. There nearly always is a mandatory pre-bid. One of the values in having those meetings is getting people together to ask questions where everybody can hear it and to explain stuff. But what I see value in is when everybody shows up and they see who else is in the room. So 9 showed up to the mandatory pre-bid and 9 bid. So if you're planning to bid and you went to a meeting, you know you probably need to be fairly aggressive. Also, the timing of when we did this bid was advantageous. It was a little bit earlier. You know, for our construction projects, we try to bid that out like November, December, because that's like the early part of the bidding window. But for like the abatement, because that when people bid that out, they wait until their boards approve the construction, then they follow it up with the abatement bids. This is actually quite early, so there really wasn't many firms that do this work that had filled up their summer schedule yet. So that was a contributing factor as well.
All right. Thanks, Corey. I think that's it.
All right.
We appreciate it. That is the end of the, of our committee.
All right, thank you so much. This would be an opportunity for the public to address the board, but seeing no public here, we will move on to the next item on the agenda. Is there any old business? Is there any new business? Having no further business, I seek a motion to adjourn to executive session to discuss specific personnel and special education individual student matters.
I move to adjourn to executive session to discuss specific personnel and special education.
May I have a second?
Second.
Motion having been made and seconded, will the clerk please call the roll?
Bonnie Kim,
Yes.
Allison Paphos,
Yes.
Amy Paling,
Yes.
Lisa Schneider-Fabes,
Yes.
John Caesarretti,
Yes.
Ann Hart,
Yes.
Aaron Stone.
Yes. Motion carries. We are now adjourned to executive session and the time is 8:41 a.m.